Good morning and welcome to the weekend Join the Dots. It's Saturday morning. I'm recording this Friday morning. What I am liking in the markets already this early is that silver's at $54 plus. Now, I think Maneco 64 the other day. Sorry, Fugly, you sit down. You're not having Anne's breakfast. Right. Silver at 54 plus is a big sign because Maneco said, or Mario of Maneco, said that basically if it stays over 51 by Friday close, then the signals are very, very strong for a huge breakout. So I don't do technicals, but I'll accept what he says. Okay, now before we start today, I want to remind you of the Stripe connection in the description below. Okay, and this is for people who want to make a voluntary donation to our service, because we are providing this, of course, for you to help you through what I think, and I think you can see it now, is perhaps the most monumental change in our society, in our lives. But what we have to do is protect ourselves. We have to protect ourselves. We have to prepare. Okay? So if you can kindly donate some money through Stripe below, as I say, use Stripe, because the YouTube connection through a super like charges you, us, whomever, 30%, which is, I think, a little bit outrageous. Anyway, that'll enable me to give Craig something for doing all the work he does, and also Anne. Now, before we start also, I'm going to give you 3 links straight away, because it's important, and these you can watch. I'm not going to give you any commentary on them today. Okay, you can just watch these. Maneco 64, silver pointing to monetary mayhem. And yes, it is. Okay, silver is pointing to monetary mayhem. And 54 plus today, it's starting to look like it's going to break out. This is only the second go, but sometimes it doesn't need a third shot. The second link I'm going to give you is to Gerald Celente. Now, Gerald Celente is a very, very good authoritative voice on what is happening. Good social commentator, sees it clearly. Reminds me of a character from The Sopranos, really does. Absolutely brilliant. Anyway, Gerald Celente, watch him. The Final Trap for Investors is the title of his video. So if you want to look it up, okay, but it's linked for you. And finally, Kai of Saw Financial interviewing Francis Hunt. And thank goodness, at last, someone in all the orbit of people that I've given you uses the same 2 words as me: corporate fascists. The world is rife with corporate fascists. Now, I picked up that phrase from Robert Malone in the early days of COVID. And if you don't follow Dr. Robert Malone on Substack, you really are missing out on so much. He doesn't just talk about health, he talks about everything, especially social and where we're heading socially. He's a great believer in going back to communities and going back to people helping each other rather than relying on the government, which of course you can't rely on, and they will steal at every opportunity from you, the public. Look at the money, look at the wealth of US Congress and tell me that comes from their salaries. Of course it doesn't. It comes from doing favours, it comes from being involved in schemes, it comes from all sorts of things that are immoral, if not totally illegal. Many are, okay? But Francis Hunt nails it. And what he does is he takes you through the 4 steps that you should be taking to protect yourself and to build, and here comes 2 words we love as well, generational wealth. He uses the expression, okay? He uses it again. And in my world, we have actually followed 3 of those 4 strategies. The only one we haven't followed is to try and make money from shorting the market. And I just don't think that's necessary. I really don't. Because timing is key there. Although he's talking about taking puts out to 2028. So that gives you a lot of breathing room to make those puts come clean, come good. So anyway, those are the 3 links I'll give you. All right. And now today we're going to spend our time on Eurodollar University. I've told you before, there is no better observer and commentator on the Eurodollar market and the interest rates and debt. And debt will always decide the market. It will not be the stock market. whatever you think, whatever you're told, whatever you've heard, whatever you believe, the debt market is the key. Okay? So let's have a look on what he says. And this is on a piece, and I will link it. It says, "Oh my God, you won't believe what just happened." Well, yeah, we all like headlines, and sadly this world needs a headline like that, otherwise people don't watch it. Which, as I say, is very sad, but it's just true. It's just true. Okay? So here we go. Rates are screaming we are approaching crisis. Right? Rates are screaming. The gold-copper ratio is discussed at length. Now, this makes an awful lot of sense for me. Okay, it makes a lot of sense. You have to think about what the construction industries are going through globally. Even in boom areas like Australia, Canada, the construction industry is shutting down. In China, it has shut down, and I've proved that time and time and time again with information from China Update for you. I've proved it. 4 years ago now, I told people to short the Chinese property market and all the developers. And there's one person who I've not mentioned on here before, but I will ask you to go to his LinkedIn site if you want to trade. So if you want to trade through what's coming, probably the best person I can give you is Simon Ree, R-E-E, on LinkedIn. Simon and I correspond every so often. We did a lot during the Chinese property crisis because we both saw it. Okay? But I can tell you that he's written a few books on trading. The Tao of Trading, I think, is the main one. He's a very good guy. He's a very straight guy. I like Simon a lot. Please do look at his LinkedIn site. If you want to start trading, get the book and then understand how to do it. All right? I don't want to, and I don't trade. Right. So the gold copper is discussed at length. Well, of course, gold copper. If the gold copper rate goes up, it shows you that people want safety. And the actual industrial business is falling, hence copper goes down. So the ratio becomes larger, okay? This is spreading to many other markets, the slowdown in China, because of course they need less iron ore, they need less copper, they need less this, they need less that, because they're not building. They're not, but they've got 30 million empty units, for goodness sake. Understand that, please. Deflationary signal. Yes, copper gold is a deflationary signal. Thus, perhaps giving the Fed the red light for QE. And what will QE do to gold? You know, I know. Okay, 4 minutes 50, he lists all the issues. Stocks indicate nothing. The only thing that I think stocks indicate is pure greed. Pure greed. Okay, rather, we're seeing job losses, private credit problems, repo signals, cockroaches, garbage lending, persistent steepening of the yield curve, record low copper to gold. They all scream recession, if not depression. And yes, it will be depression. I make no bones about saying that. We are heading to a depression. Or an interim sugar high based on massive QE, which again, either way, gold and silver, they're your answers. So the modus operandi of Eurodollar University is totally justified by what Jeff's talking about here. Seeing everything that the MSN, mainstream media, and economists, all the leading economists at the Fed, at the Bank of England, at the ECB, all these economists cannot see what Jeff is telling you is happening in the credit markets. They can't see it because they don't want to. And it's not in their interest to see it, because if they do see it, they'll probably be moved off their post and found somewhere quiet where they don't disturb the market. 6 minutes, repo, 10.6 billion borrowed this Tuesday against mortgage-backed security collateral, which obviously is garbage when the prices start to fall. And we know they're falling because Michael Baldonaro has told us they're falling. Okay? And he's told us there's 38% more supply than demand. We know they're falling. Just simple. Okay? Economics 101. 14 billion was borrowed on Wednesday morning. Now, I haven't got Thursday and Friday stats yet. Okay? 6 minutes 30, look at the Repo 2019 chart. I've talked about this many times. Okay? We had a colossal repo problem at the end of 2019. Fortunately for the economists and the economics of the market, temporarily, something happened in 2020 which allowed them to print an enormous amount of money to get them out of that problem. It's just a fact. Okay? The SOFR rate has moved above Fed funds of 4 in late October, and yesterday over 4 again. These are all leading indicators. These are all massive signals. If you don't understand them, fine. Listen, I'll explain them. Okay, or Jeff will. Jeff is brilliant at explaining these things. 15, 20-minute videos, he explains as much as he can. 9 minutes 45, what is happening? Official answer, quantitative tightening. Rubbish, garbage. As much garbage as they're lending, okay? It is not quantitative tightening that's causing the repo problems, okay? It is something much, 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 much more fundamental, as the gold-copper ratio is telling you, okay? The Federal Reserve Bank of New York shows more tightening signals, more tightening signals coming out of the Federal Reserve Bank of New York. 11 minutes, foreign money managers react to the tightening curve. Not political, just monetary mechanics, okay? They're selling US treasuries from the reserve to provide cash to their system because they know what is likely coming. So they're preparing, which is what we must do. We must prepare because this is now a certain journey. No ifs, no buts, it will happen. Graph at 11 minutes 40 seconds, 2025 use of reserves has been enormous. Leading indicator. If they're having to use reserves, it's a leading indicator of a deeper problem. Okay, and that move accelerated at the end of July and August, and that's why I said to you at the end of July, the dollar is going to appreciate. Where every single person on Bloomberg, CNBC, every guest was screaming the end of a dollar. And there was Jim, what's his name? Jim, can't remember his surname now, but I remember him saying in 2009 he'd sold all his dollars, he'd sold his furniture, he'd sold his house, he moved out to Thailand. I think I know why. Anyway, so this move accelerated July and end of August, and that's because of the flat beverage curve. Remember, it's all about jobs and the future of jobs and the people's belief in their security of jobs. If they haven't got it, they don't spend. And if they haven't got a job, or they lose their job and they've got a mortgage and an auto debt, they can't repay it. It's that simple. Okay? July payroll numbers crystallised the thought of the beverage curve problems and the garbage lending, the private credit, the private equity, etc. Eurodollar tightened and foreign reserve managers got active. They can see it. They're seeing the market tighten and they're getting active. They're preparing for a problem. 13 minutes, 168 billion of foreign reserves have left the New York banks. Can you just stop for a second and think about that number? $168 billion has left the New York banks. 13 minutes 20, original strains appeared overdone. Okay, reaching the same levels as March 2020, but they're not overdone now. And what happened in March 2020? Massive QE. This is their only answer. Okay, they may try it again. They may just try, even though everything says don't, they may just try this one last QE. And if they do, gold and silver are your friends and can build generational wealth. The complete lie of the stock market at the moment has everyone totally distracted. 67, 68, 69, 67, 68, 69, everyone obsessed. Meanwhile, silver, 45, 47, 49, 51, 53, 54. What's not to like? Okay, while everyone watches the stock market and CNBC scream that it's rocketed 30 points in a day, 0.5%. Okay, so bad lending standards and poor risk assessment ratings, all obvious. The big one, the sheer scale of private credit now being funded by insurers. Remember 08, remember AIG. The insurance industry is massively funding private credit. And private credit has only got one place to go, and that's down. Okay? So yet again, end of cycle optimization of ratings. Lies. The rating agencies are lying. And just to prove this, okay, let's have a look at this one down here. The rating agency called, let's have a look at it now, Egan-Jones. Okay, just to show you, they rated, where is it now? Let's have a look. Oops, a daisy. Press the wrong button. This is really important because I know how rating agencies work. They rated 3,000 companies with 15 analysts in 1 year. Now assume you have 200 days in a year. Okay, that means each rating was produced in 1 day of analysis. 1 day of analysis produced a rating. And these ratings are being done by private correspondents. They're not public. These ratings are, you know the word, garbage. And it will be proven. And this company won't exist in a year's time, but how much damage will it wreak on the markets through its sheer greed and incompetence? You cannot rate a company in 1 day. It is impossible. A week, fine. So these people are spending about 14% of what should be their time on a rating. It doesn't work. It leads to crises everywhere. So there we are. That's a rundown. I'll link that episode of Eurodollar University for you. Please, I've linked the other 3. Do have a look at them. We'll talk about them tomorrow in the context of everything that's happening. Okay? Thank you very much for watching. And remember, please, just have a look in the description. If you can, send a little bit of money. Send a cup of coffee, as they say on Neil Oliver. Send the money for a cup of coffee at the end of the month. I can pay Craig and they can have some coffee and I can keep on doing this. All right, but use the Stripe button. It works very well. Thank you very much.